So, our lesson that we're going to talk about today is understanding our bank statements. So, at the end of the month, your bank is going to send you a statement that includes all of your transactions for the month. What you should do is check all of those values with your record, with your um, checking account balances, and make sure that both accounts will match. But today we're just going to look at this statement itself. So let's understand some things that are going to show up on your statement. First of all, you're going to have service charges on your statement, or you may have service charges. So those are charges by the bank for your services rendered to the account. Now, they could be for using the ATM. You don't usually incur expenses if you use your own bank's ATM, but if you use a neighboring bank's ATM, they're going to charge you a fee to take money out. You might have an overdraft fee. If you spent more money than you have in your account, that will give you an overdraft fee. You might just have a checking account fee. You want to try to get a free checking account if you possibly can, but sometimes they charge you a fee per month to have that at their bank. So you got to try to shop around and find the best checking account for your needs. Now, those aren't the only fees, but those are some common fees you'll see. The bank statement that we're going to talk about comes from your bank, and it lists all of the activities, whether they're deposits or withdrawals, any fees that you might have in there, and it might include some interest. Not all checking accounts collect interest, but some do. So what they'll do is they'll average your daily balance and give you some type of interest. It's not very much. It usually amounts to just change, but it gets added into your account. So our formula today is pretty simple. We're going to start to calculate our present balance. We're going to start with our previous balance. We're going to add all deposits that were put into your account, subtract any withdrawals, whether they were from a bank teller, from the ATM, from writing a check, subtract all your service charges, and then simply add the interest if that's applicable on your account. So this is the formula we're going to use to do our calculations. So here's an example of a generic bank statement. So this bank statement gives us a previous balance of $874.63. What we want to do is calculate the present balance. So the present balance on the account is going to start with the previous balance, and that's $874.63. We're going to add in all of our deposits. So you can see that there were 2 deposits made into the account, and there were 3 withdrawals. So we're going to subtract each one of those individually. Or you can add them together and subtract all at one time. The service charges, there's 2, so we're going to do 2 subtractions on the service charges. And then finally, we're going to add in the interest at the end. So when we do this calculation, adding our deposits, subtracting our withdrawals, service charges, and adding in our interest, you should end up with $1,064.47 into your account. So that is your present balance. So you should now take your checking register and make sure that both accounts match. All right, so let's look at a second type of problem. So this problem is about Rachel, and she received her bank statement, and her employer gave her a raise, but directly deposited her check into her account. So she wasn't sure how much her raise was for. But here are some things that she knows. She knows what her previous balance was. She knows what her previous month's pay was. She knows what her previous balance was. She knows the amount of checks that she wrote and the withdrawals that she took out. And she also knows what her service fee is. On her bank statement, it gave her a new balance of $1,491.49. What we want to figure out is how much was her raise. So we know that the raise is going to be added in. So I'm going to set up a variable and I'm going to let X be Rachel's pay increase. So from our formula, I'm going to start with her new balance of $1,491.49. And I'm going to set that equal to her previous balance of $575.34. And then I'm going to add in what we know her previous check was. We know it was $3,125, but we also know that she got a pay increase. So we're going to put our variable in right there. Then we're going to subtract her checks from her account. We're going to subtract her ATM withdrawals, and we're going to go ahead and add in her service fee. So I've set up my equation. You can see my variable here. That's going to stand for my, or for Rachel's pay increase. So now I'm going to add and subtract these numbers, and that's going to give me a total of $1,341.49. Plus the pay increase that she got from her employer. And now I have my equation ready to solve. So I'm going to subtract $1,341.49 from both sides. And I'm going to end up with a total of $150. So that means that her raise totaled $150. That was the extra money in her account. Okay, I'm going to put your assignment on Google Classroom for you to try. If you have any questions, please send me an email. Have a great day.